So let's talk about what happened today, and then we'll go over some of the stocks performance and the general market and the direction it may be heading toward. Today we have a huge gap up on the QQQ as well as the SPY from President Biden news. The president mandate that vaccines will be required for all federal workers and some other mandate in regards to the vaccines. So that is a huge gap up. Now, when you have a huge gap up like this is normally just front runners from the future markets, the pre-markets. um, this often will be sold upon. So, but how much does it sell is really you can't tell. Okay, all you know is that when it gaps up like this, the tendency of it to sell is going to be pretty high, and then you would expect a bounce. Now, what happened was it ended low of day, so this was not expected, and it's quite rare to have a low of day ending and quite negative, although the volume is pretty high too. It's quite negative, although it is option expiration, which would may indicate that it was hijacked in the afternoon. Like I said, in the afternoon, you tend to have stocks and even the general market, the QQQ, getting hijacked and goes to low of day. So it is amazing that even the index can do this type of level to level, right, almost right at the 20-day moving average. Um, the weekly still looking okay. However, this is a sign of something, something that is not really good. So I got head fake in Amazon. And the reason I got head fake into Amazon is because I was reading the volume on the options and I have forgotten some of the. Now I'm transitioning from a risk management account to a more aggressive account. So I'm essentially not selling the straddle, although I do still sell the straddle on my small account. The overall point is that I'm moving toward an aggressive uh, strategy, and this poses a issue for me because I'm not really have been successful going with an aggressive account or an aggressive strategy, and a lot of my bad habits tend to show up. So, what did Amazon do? Well, look at that gap up and then ended essentially low of day. So that's 2 days in a row, low of day ending. Thursday and Friday, both days are low of day ending. I was not expecting that. What was I was expecting? I was actually expecting the Friday hijacked. So here's that Friday hijacked right here. Right, I was expecting this Friday hijacked, staying flat, and then moving toward. What would you think? 3,500 or anywhere close to 3,500 was my expectation, and it was looking that way. It was looking that way. If you will, I didn't really care about the option volume for this week or that was expiring today. There's huge option volumes, of course. So I was looking at September 17th, which is next week, which also happened to be triple witching. But I was looking at the 3,500. So look at this volume right here. It was, coming in steadily, good, good, good. So to me, when I was seeing this, I was like, okay, look, they got to be poised for a run up in the afternoon when the volume is light, when traders starts to go home, when the institutions are pretty much gone for the day, the hedge funds, the day traders, the momentum traders, they're gonna hijack it. This looks to be a classic signal. The volumes were coming in on the 3,500 to get hijacked and then run up. So I was convinced of it. I don't know why. So when you convince yourself, it's called a brain seed because essentially you plant a seed inside your head that something is going to happen when really anything can happen in the stock market. You know, brain seed is one of the biggest reason why I lose money, and maybe why other people will lose money, is that they kind of self-fulfill themselves, convince themselves that something is poised to happen, and not really look at the technical correctly. And if you look at the technical correctly, what do you see? Well, you see the 15-minute trend line and the 5-minute trend line both failing in and going into the afternoon. At the time, you might say, well, look, it is failing, yes, but this VWAP is going to be tested, and then it's going to go the other direction because of this volume right here. This volume right here had kind of convinced me, and it was probably correct. It was probably correct. However, the morning and the afternoon sessions, and this was around, I guess, 2 o'clock, the afternoon session, so it's going along close to 3,500, would indicate that eventually it's going to get hijacked and go to 3,500, or maybe even break 3,500. So that's what this volume is telling me. However, the morning session and the afternoon sessions are essentially two different sessions. They are disconnected. And what was going on in the morning do not follow the afternoon. Oftentimes it does follow, but sometimes it doesn't. Many times it doesn't, because of issues related to the general market. So I believe Amazon was poised to go up, or to get hijacked. However, this is showing me that it was poised to get hijacked. However, what happened was that condition changed. So here you can see the volume came in. These guys were mainly because of this sell-off right here. But then you see volume coming in for this guys, right? So look at that. These volumes started coming in. So condition change overwrote what was to be expected, and now what happened was that this what was to be essentially a condition was poised to go higher, turned into a condition where now it's gonna get sold off. It can flip in a dime. It can flip in a dime because the technical has went from positive to negative, and that's all it took. All it took for the program to see, look at this, 5 minute, here's the top, here's the top, here's the top, lower low, lower highs. Here's the failing of the 15, failing of the 15, failing of the 15, failing of the 15. This VWAP is now a trap. This VWAP is now a trap. Right, I wrote right here. Let's take a look at this. If we look in here, zoom in a little bit. See, this right here is a trap. Okay, this right here is a trap right at that VWAP, because you have a condition where it's lower highs. This is a fail right here of the 15, and then once it broke this, it was low of day. Always low of days, or in many cases it goes low of day. I don't know why it does this in the afternoon, but that is the characteristic. That is the trend. That is appears to be what is going on right now. So it went to low of day. Of course, I took the loss, and of course, I made the brain seed. Like I said, I was brain seed, and I made a purchase right here. It looks good to me at the time. It looks like um, a perfect buy at the time. You know, right here at 30, I believe was when I bought it. Right here at 30, and then I added another position. I don't know why. Keep doing it. I was convinced. I added another position, and then at 29 or something right here, because I was thinking it's gonna go up. It's gonna go up. Then I added another position down here at 24. Says it's gonna bounce. It's gonna go up. So that's three position. And guess what happened? It went down to low of day. I just had to cover and took the loss. Low of day took the loss 1.7k plus 2. Now, normally I wouldn't do this. The only reason why I did it was A, I got tricked. Okay, getting tricked is one thing, but also being overconfident because the account had again hit a new high in the morning because of some of the other trades I made on Shopify and some of the I had a Shopify and AMZN that I cover. So I had my account went to a new high again. So that is something that if you continue to make gangs, you become complacent, overconfident, make stupid mistakes because you're just not in the right mindset. So it was both condition of being tricked. And now had the account not made a new high, I wouldn't have taken that risk. I definitely wouldn't have add two. I definitely wouldn't have add two, and I definitely might have just taken the easy loss here. Your mindset is different when based on your gains and loss. And that is something that is very difficult to control is the emotional aspect of it. And controlling that emotional aspect and being as robotic as possible. Essentially, you just got to ignore, your gains, ignore your loss, and just try to play it based on discipline. Being disciplined, and I wrote it again. Never add one, and of course, never add two. I don't know why I add two. I was so convinced, and I actually added two. So I'm back to, I'm still up for the week compared to last week, but I've lost 1.7K. So for this position, so now, I have, I guess the morning I wrote down on my note as a new high on my account, and then the afternoon I lost the 1.7K. So now I'm not at a new high, but tracking these gains on the account, I need to be careful that I don't become overconfident, become complacent, and see myself with bad disciplines, bad disciplines. I mean, adding two is just a no-no. I mean, adding one is bad enough, but adding two is a no-no. So what does it go? Low of days. I mean, like I said, level to level, low of day. Um, you know what? It's poised to get to this now. I mean, if you look at it now, it's this 60-minute trend line. This looks like a magnet. This looks like a magnet, to be honest. The 15. Let's see what the 15 failure of the 15. So yeah, Amazon is looking bad because now you got red on the McCullen oscillator. You got trend line of the 20 and the 50 kind of lined up, like I said yesterday. I mean, I said this yesterday, the 20 and the 50, you know, and but the it was option expiration Friday, which is always a beast. And these type of signature you see here, this is the rarest of the rare, even rarer, even more rare than V recovery. There was a signature of a V recovery, I think last week or the week before last, where it went down and then went all the way up. That's rare. But this oscillation signal where it went boop, boop, I mean, it's pretty rare. Now, it went to low of day, so it's not as rare. So if it went like this and then went back up, that would be the rarest of the rare pattern, like an oscillation signal. They don't normally give you oscillation signal because people tend to hold their losses, and then these guys, if they hold their buys, they can cover here, and if they went the wrong way, they can cover down here. An oscillation signal is the rarest of the rare for a signal. But I don't think this Amazon was really because of manipulation of Amazon. Really, I think it was because of the QQQ. I mean, I just think it was the QQQ getting hijacked. This was the results of why Amazon, of course, was strong, right? It went down, it went up, it was looking strong, it was poised to go for the afternoon hijack. But this changes everything. This really, I mean, the global market or the general market overrides individual stocks, tendency or behavior in this case. The QQ Amazon poison to go up at this point. Everything changed. Let me see if I could overlay compare, and if I put the QQQ here, let's see how it looks and see if they actually kind of line up. Yeah, you see that one right there. When it broke on the QQQ, Amazon was still strong. This was low of day for the QQQ, and here is Amazon. So right here, once this was established, whatever strength Amazon had and was supposed to happen, had the QQQ stay like this and maybe even rally, that would be the typical signal, right? A huge gap up. Good news on the vaccine. So this probably tricked a lot of people, to be honest, because this was kind of a signal where it should have gone like here and then gone up. That would be the expectation, especially on option expiration. Option expiration ending on low of day for the QQQ. I mean, that is really pretty rare, to be honest, because I mean, I guess it's the weekend, but there's nothing going on as far as the holiday to why this actually happened. But this was so powerful that the Amazons, the car buyers, the day traders, all the folks who were expecting this to materialize and then do that end of week, the end of the, I guess, the afternoon end of Friday rally, all of that went away, and then it's the condition of low of day. I mean, yeah, that's just unbelievable, just to be honest. But it is what it is, and you gotta read the technical. It's right there for you to see it. It's really right there for you to see it if you really pay attention and be, not complacent and be astute and be a robot. If you can be a robot, if you can actually buy programs to actually think like a robot, unfortunately you can't because no one can develop programs like this. But except for like the huge hedge funds manager and whatnot. But if you can be as robotic as possible and just read whatever is coming before you, you can do quite well in option trading and the general and just risk management, being disciplined. And making money on any account, even a large account or a small account, or even your 401k. So overall, Shopify, like I said, right, I had to cover I made some gains on this guy, had some position that I cover, at the high of the day, right? I had a straddle and I cover one leg of it and held the other leg, which I normally don't do, but because of an aggressive account, I went ahead and say, well, you know what? Let's go ahead and cover one leg and then hold the other leg, and then I cover the other leg here. Of course, I couldn't see this. There's no way at this point I could have seen that it went all the way down to, I guess, retest of the 50. There's no way. At this point where I cover the other leg and it went up to this level, I was feeling pretty good. My account was at a new high again. The afternoon, whatever happened, it doesn't matter. Because I'm at a new high. I'm feeling good. I didn't expect. Boom, what's that? Low of day. Did not expect that. I mean, that's Shopify. That's Amazon. And now Shopify looking pretty negative, unfortunately. Because now it's at the 50 again. So my goodness. I mean, if it fails this level, it's gonna, Monday is gonna be. I'm assuming it's gonna be a gap up on Monday. To be honest, there's no way they're not gonna front run this and gap it up. But if the gap up is not successful in the sense that day traders, momentum traders, whatever, because there's a lot of shorts. There's a lot of shorts on these guys, and they will cover as long as the strength follow. If strength follows, they will cover. The shorts will cover. You get that squeeze, and it will run. and then Shopify will stay in the range up here somewhere and looks decent for the next move. However, if there is no movement and it continues to stay below the 60, and I think it continues to stay below the 15, yeah, this is below the 15, then it's going to be bad. Then it's going to be another low of day sell off to this level. It's just yeah, it's just gonna be bad. So what really happened today? Well, I saw something with Apple that really was disturbing. I mean, I was watching this and then you got this. And I was like, what the heck? So Apple triggered this and then the QQQ, if you compare it with the QQQ, there was actually a behavior with the QQQ. Uh, you know. But then it started to diverge. Why would it diverge? Well, because it wasn't that general selling off, right? If it was a general selling off and you got like continuous gradual selling off and just institutional selling off, the programs would latch onto each other, and both the QQQ, Apple, Amazon, I mean, every stocks essentially, every high flying stocks would essentially follow the same lockstep pattern. However, this is the divergence. This is kind of like news, a lawsuit. Something happened, right? I think it was a lawsuit that triggered this behavior. I may be wrong. Haven't followed exactly what happened on why Amazon did the sell-off, and guess what? Ended low of day, but that happened. That was something that kind of brain seeded me to thinking maybe they were able to rescue the QQQ. Well, they couldn't rescue the QQQ because, like I said, in the afternoon, if the shorts take over, and they know they can take over because the QQQ was looking weak, and I think Google was looking weak as well. There it is. Look at Google. I mean, it got that hit and then low of day, right? Low of day. So the shorts were successful. So this is all pretty much shorts. Essentially, all the shorts went and was successful in getting Google, getting Apple, and then of course Amazon kind of followed through on it. So low of day for Amazon. Tesla, I think also was low of day too. Look at that, low of day. So everything was low of day for all the high flying stocks. You know, Fortunately, Friday option expiration, this doesn't really follow through, in my opinion. It could follow through a little bit on Monday, but it doesn't necessarily like, oh my goodness, this sell-off is so wicked. This is gonna be the end of the bull market. It may. Sometimes a trigger of this magnitude of the shorts, they kind of just, everything is kind of self-fulfilling. And if the buyers, if the hedge funds, if the traders, the momentum traders, whatever, if they don't follow up and try to rescue, well, guess what? Shorts is just going to pound more because they got, margins, they got money, and hedge funds can flip their sentiment from up to down in a button. They can switch it from up to down, and all of a sudden, what was to be positive sentiment becomes negative sentiment, and all you do is you get a massive sell-off like this for no reason other than because one day, all it took was shorts being able to be successful, and then they front run it in the morning, gap it down, and then next thing you know, it's just an avalanche. An avalanche, all it is just one little snowball, one day, one little snowball rolling downhill and just building up momentum. And what is this? Was it the longs? Nobody care about diamond hands. I mean, most people just have stops, and once it goes down 5%, 10% of the portfolio, they just get out. They just get out, and all you see now is that everything just goes hand and foot. I mean, next thing you know, it's just, boom, huge elevator down. Everybody wants to get out. Everybody wants to sell the kitchen and the bath water and the whatever, the baby's bath water. It just all just looks like it's just fire and brimstone. And that could very well happen. Very well could happen. But it doesn't necessarily have to happen because Friday, what happened in Friday, really doesn't necessarily have to. This right here is just all shorts. It is nothing fundamental. There is nothing fundamental that say, oh, this sell-off is due to institutional selling. It's all shorts trying to a match, light a fire that happens to turn into an inferno or a forest fire if it actually do happen. But it can easily be quenched, and I think traders know that. So and I think hedge funds know that, and a momentum trader, they can rescue this on Monday. But even if they rescue it on Monday, I don't know if we gonna get that capitulation top now. That capitulation top may not happen now because it does this right here changes everything, to be honest. This and it's all of this happens because of stupid Apple, really. It's just all because of this news that came out. This changes everything. This news that changed out because Apple is a large component of the QQQ, and I think it's also in the SPY, right? Also, it's in the SPY. So this right here of what happened because Apple was a huge component kind of just trigger everything because now you got it was weak and it was it gapped up, so it was weak, and then now more selling leads to more selling, and it's all because of one stupid stock, not a stupid stock, but one bad news on a leading stock that happened to follow through to be low of day, and now all of this is now gonna be a setup. Eventually, technically, everything now looks bad. Technically, everything looks bad, and it could just lead to more selling. Next stop for the SPY could be the 50, right? So, what are some of the high flyers? Let's see. Google looks bad now. I mean, it looks good, but now it looks bad. I would not be buying any bounce because guess what? You don't know if it not can't get to here. It is so expensive. I mean, you say, well, this is a discount. It's not a discount. It's not a discount. How is this a discount when a month, 2 months ago it was at 22.50? How is this a discount? A discount would be probably 2,000 maybe a discount, or even 1,500. That's way too much of a discount. But 2,000, this might be a discount, not 2,800, because one day it dropped to the 20-day moving average. It can easily go to the 50-day moving average. All of these stocks can easily start to sell off, and sell off pretty bad, to be honest. I don't think necessarily it's going to happen, but I'm not going to predict it because all I'm doing is just looking at charts, looking at technical, and trying to be as robotic, unbiased as possible. And unbiased as possible means that it can go whatever direction it goes, based on the signals that are going to relay. So what I will be doing on Monday definitely would not be playing anything that would lead to like selling options. Selling options, especially, the risk of a sell-off is high, so I would not be selling any calls. Any call option, I would not be holding any straddle. And if I have a straddle, I would probably cover it right in the morning, because guess what? They may be able to rescue a little bit in the morning, but like like Shopify. Look at Shopify. They may be able to rescue it. This is Amazon. I mean, Amazon is just as good. They may be able to rescue it a little bit in the morning, but guess what? At a certain point, it can start to just cascade. It can just start to cascade for no other reason other than the fact that the technical looks bad. The technical looks bad, and if they can't rescue it, it's gonna go down. And these are magnets. These are magnets. They don't have to necessarily get there, but they'll get there if there's no buyers. If there's no buyers, shorts will come in and they're gonna hit it. And if the shorts hit it, guess what's gonna happen? Stops. It's gonna hit stops, 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 and the sellers, I mean the any of the longs any of the people holding in their 401k, they have stops, and they are just gonna get triggered, and next thing you know, here's the next stop. And this next stop is when, the hedge funds and the institutional, they say, hey, you know what, we're gonna try to hold it here, and maybe they be able to rescue, get some buying, and then more buying leads to what? A covering. Well, the shorts are now going to start to covering. Well, cover is buying, so that's going to lead more buying, right? And that's how you get. That's the dynamic of the market nowadays. This is all basically controlled by the front runner, the hedge funds, the day traders, and people who's able to have enough money to hijack it one way or another. But they all base it on technicals. And the little fish like you and me, we just got to be able to read the same technicals that they do and try to get in ahead of the game, or even pick up the crumbs. I mean, a crumb for any one of these movements can be as easy as 5,000 to 10,000. I mean, it really can be. Uh, Although I would not be buying more than one option, to be honest. Any of the YouTubers you see out there that are buying like 10, 20, 30 options and making 100K, I would not be doing that, because I just don't believe that is necessarily legitimate. It could be legitimate, but I don't necessarily believe it, because from what I've seen, they do see your shares, and unless, on the downside, you can probably do that, because if I think there's a chance that if the QQQ, or the, I guess, yeah, the QQQ, for example, if it starts to sell off, well, then you can probably buy, sufficient amount of options and get away with it, because buy sufficient amount of puts and get away with it without having it going the wrong way. They seeing your shares and leading to, I guess, a reversal. It's because there's too many sellings. If there's too many sellings, the elephants are just gonna stampede, and it's just gonna just get out of my way. And if that's the case, if it's a get out of my way kind of thing, you can buy a lot of puts and get away with it, because boom, I've done that before actually. I buy about one lot of 10 options on Amazon's, right? 20 options on Amazon, and gotten away with it. Only during the scenario where it's really, like not more than this. It has to be like volume of volume. It's got to be like double this volume, double this volume, and it's like just a complete flush. If it's on a complete flush, you can get away with it by buying quite a bit of puts, 10 puts, 20 puts, and even though the market makers say, oh, I'm gonna flip it the other way, they really can't, because it's a stampede. If it's a stampede, they really can't do that. And the same with the reverse of that too. I mean, Amazon, you've seen a scenario where they just squeeze in the heck out of the shorts. I mean, you can probably get in the beginning or something, or maybe add on. I'm not sure if you want to be buying 10 lots up here, because they can easily just flip it a little bit, and then that 10 lots, or that 10 option, can easily be negative 2,000, 3,000, 4,000. Then you just fill in the pain. So I would not be doing. I prefer to buy 10 options, 20 option on what they call the flush, right? Where it's like back here in these condition right here, where the volume is so huge, and everybody just want to get out. That can happen. We can get that scenario, and it may be poised for it. Who knows? It's not my job here to kind of explain what will happen. It's my job to set up the discipline and the scenario, where when you see it, what are your options, what are your choices. And to me, it can easily. I'm telling you, a lot of the analysts gonna go out there this weekend. It's gonna say it's doom and gloom. It's gonna go down, and Monday might even be a huge gap down day. I mean, the front runner, they might go like, you know what? Let's tank the futures. And all you're gonna see, on Sunday evening, 8, 9 o'clock, you see the QQQ is down 100 points. already front running. 100, the SPY is down, whatever percentage, is down quite a bit, all the way down here, front running. And you're like, my goodness, how can they do that in the future markets? They do it because they're front running. They get in first, and they're getting you to feel that fire, to feel the fear, and that's why day traders, they tend to cover all their positions. They like to cover all their positions, especially over the weekends on this type of scenario. Even though this looks like nothing, it can easily be something. This is a match that can easily turn into a inferno, and we'll see if they're able to rescue it. Hopefully they'll be able to rescue it in the future markets and not be like down 100 points, but it could easily be down 100 points. So I've seen that before, especially the last time it happened was seems like a long time ago, uh, doing this scenario, right? But this is not that long ago. If you have, this is back in May. If you have, and then of course this scenario, this was back in March, right? So it can happen. So here are these scenarios. Here this scenario. This can easily be that same scenario. So brace yourself. And I think, now that I'm thinking about it, I might want to get out of my 401k just to be safe, to be honest. Probably in the pre-market. Man, I didn't even think about it now, as I think I should have gotten out of my position in my 401k, to be honest. Now I'm kicking myself that right now it's too late in the extended market to even get out, unfortunately. So I might have to wake up early on Monday and try to get out of the pre-market if the futures are not tanking. If the futures are tanking, then geez, I don't know what to do. But yeah, I'm probably gonna see if I can get out of something right now on the extended market. But that's what I am seeing, and let's see what happens next week.